Hey guys, welcome back to another episode. In this video we will be going through our very simple yet profitable new MADX Cobra system that you can use in the forex, stocks, and crypto market. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. The new MADX Cobra trading strategy is an extremely low-risk high-reward strategy if you use it properly. The only thing that could make this system fail over the long term is you not sticking to the rules. The MADX Cobra system is incredibly simple and easy to use. Once you are used to it and have made a few trades with it, you'll find that you're spending very little time actually running with this system. System setup. This is in general a very clean system. When you look at the chart setup, you'll notice that there are in fact very few lines and indicators drawn on, which means the chart is very uncluttered and easy to read. There are actually only 3 indicators used in the whole system, even though initially it looks like 7. I've listed the individual indicators you need, and then I'll explain what each one does. First, 200-period SMA, or simple moving average applied to the typical price average of high, low, and close. 200-period SMA, calculated off the high of each candle. 200-period SMA, calculated off the low of each candle. Second, 10-period EMA, or exponential moving average applied to the typical price average of high, low, and close. 10-period EMA, calculated off the high of each candle. 10-period EMA, calculated off the low of each candle. Third, 5-period ADX, or average directional movement index, applied to the typical price average of high, low, and close. The 200-period SMA is a basic moving average line which calculates and plots the average price over the last 200 candles. The 10-period EMA is another moving average, but this time it's calculating the average over the past 10 candles. And this moving average is exponential, which simply means it gives a little more weight or importance to the most recent candles over the oldest ones. The moving averages tell us the direction of a trend. If the line is moving up, it means there is an uptrend, and if the line is moving down, it means there is a downtrend. The ADX is the average directional movement index, and it really complements the moving average lines. This indicator in its most basic form measures the average direction up and the average direction down over a set period. In our case 5 candles. The indicator is used to tell us the strength of a trend. It doesn't tell us the direction of a trend. The ADX draws a line on a graph underneath our main chart. If the line is moving upwards, it means the trend is strengthening. If the line is moving downwards, it means the trend is weakening. There are also certain levels on the graph. When the line is below a certain level, it means there is no trend at all, and when it is above a certain level, it means we are in an extreme trend. All this is explained more clearly as I go through the system with you. Establishing the short-term trend direction. This is the first element of the new MADX Cobra system. The idea is very simple and the basis of just about every trend-following system ever devised. We only trade in the direction of the trend. So the first thing that needs to happen is for us to establish the direction of the short-term trend and then get ready to trade in that direction. The emphasis here is short-term. This is where the 200 SMA, to keep it simple, from now on I'll call this the black line, comes into play. We use the black line to help us easily identify the direction the market is moving in over the last 200 candles. It's just a most straightforward principle you can get. If the black line is moving upwards, it means the short-term trend is up. Conversely, if the black line is moving downwards, it means the short-term trend is down. There is a drawback to the moving average. It's a lagging indicator. So the real price has already changed from one trend direction to another before the moving average changes direction. So we need a secondary indicator to establish which way we should be trading to compensate for the delayed aspect of the moving average. And the indicator we use is the best indicator of them all. Price. When the price crosses the moving average, we then change our trade precedent. To put that in simple terms, if the price is above the black line, we only take long trades. If the price is below the black line, we only take short trades. That means we will only ever buy the currency if the price is above the black line, and we only ever sell when the price is below the black line. This is a strict rule which is never broken. This basic method does two very important things for us, which makes the system so much more profitable than other trend-following methods. Firstly, it keeps us out of low-probability trades. It prevents us from taking what may at first appear to be a good trade setup, which is in fact going counter to the prevailing trend, and is therefore less likely to turn out profitable. Secondly, we can get into new trends much earlier than if we were waiting for the black line to finally change direction, which could take several hours or more to happen because of the lagging nature of the moving average. Most trend-following systems use a two-moving average crossover to signal the change in trend direction, but that inevitably only happens after the change has already happened and potential profits have been missed. With the new MADX Cobra system, we use the price crossing the moving average as the earliest possible sign that the trend is changing direction, which means we can capitalize on new trends before anyone else and pick up bigger profits than everyone else. Our entry signals. And now, we need to decide upon our reasons to enter the market in whichever direction the trend is telling us to go, and this is where the 10 exponential moving average enters the system. To keep it simple, I will call the 10 exponential moving average the blue line from now on. You'll notice on both the black and the blue, I've used three lines. A thick inner line, with two thin outer lines on either side. The inner line is the true moving average, which represents the average typical price over the last 200 or 10 candles respectively. If the price is ever inside the buffer zone of either moving average, it's classed as a no-trade zone, and we do not enter the market for any reason. But, as soon as the price moves outside of the buffer zone, we are looking for entry signals. And the basic entry criteria are very simple. First of all, we need to see whether we are above or below the black line, so that we know which direction we are supposed to be trading in. For this example, we are saying that price has moved above the black line. So if we are above the black line, we wait for the price to close outside and above of the blue buffer zone. You should notice that the price has moved above the black zone, which means we are now only going to take long trades. We then get a candle which breaks out of the blue buffer zone and closes above the outside edge of the blue zone. And now, trade filters. Filtering out bad trades has become the search for the holy grail for all traders. Unfortunately, there is no way to avoid all the bad trades. It's a guarantee that we will run into bad trades and occasionally lose. We can't completely eliminate that, and now, I want to show you the important part. How we use the 5-period ADX to help filter good trades from bad trades. When the 5-period ADX line is below the 40, it means there is no trend. When the 5-period ADX line is above the 75, it means there is an extreme trend. When the ADX line is moving upwards, the trend is gaining strength. When the ADX line is moving downwards, the trend is losing strength. Whenever we see the signal candle, we immediately look down at the ADX to see where the 5-period ADX line is. If the ADX line is below the 40, we do not trade, regardless of anything else. We only consider entering a trade if the ADX line is above the 40. As you can see, the ADX is a very simple indicator and very easy to use as a filter to protect the system from bad trade entries. Stop loss. Most people think that the most important thing when trading the market is to make money. Wrong. The most important thing is to not lose money. If you've been trying to trade for some time now, you will already realize that it's very difficult to avoid bad trades. It's actually very easy to keep entering trades that go wrong, one after another, and take lots and lots of small losses. And those small losses can quickly add up to one very big chunk of your trading capital washed down the toilet. Remember, no system is perfect, so, wherever I enter a trade, I draw a straight line back to the blue zone and place my stop at the outside the blue zone. Exit strategy. The exit is simply signaled when the price crosses and closes on the other side of the blue zone. So suppose you are in a long trade following the trend up. You would close out of the trade when the price crosses back down through the lower blue zone. And now, here are other examples of the new MADX Cobra trading strategy. The new MADX Cobra trading strategy is an extremely low-risk high-reward strategy if you use it properly. The only thing that could make this system fail over the long term is you not sticking to the rules. As always, if you learned something new or if you want more videos more often, make sure you subscribe, click the notification bell, and leave us a like to show your support. See you next time.